Good morning, everyone. Today we're going to be talking about a credit sale. A credit sale means that no cash has changed hands at all during a transaction. In other words, you buy now and you sell later. So what do we need to know about a credit sale? Well, firstly, the source document that we use is what we call an original invoice. And how do we remember this? Well, remember the customer always gets to keep look at the C and close it to become an O. So the customer always keeps the original invoice. This invoice, all the information about what they have bought from you, when they have bought and how much it is then transferred to a new journal called the Debtors Journal. And we abbreviate it to say DJ. So how do we enter transactions into this Debtors Journal? We must remember that a credit sale cannot be recorded in the cash receipts journal because no cash has changed hands or has been received by the business. So credit sales go into the Debtors Journal, and here we simply record who has bought from us on credit and what the cost price of the goods are. So this is what a Debtors Journal looks like. It's a lot simpler than our CRJ. We start off with a document, and this is the invoice that we have received, and it goes in number order. Then we write the day that the debtor bought from us, and then under the debtors column we simply write the name of the debtor. We then have a sales column which records the selling price of the goods, and we have a cost of sales column. At the end of this month, in March, the sales column and the cost of sales column gets totaled. So, let's look at an example. On the 9th of May, ABC Stores sold items to T. Thomas for 5,000 Rand. A markup of 60% was used, and we issued invoice number 75. So my document number is 75, the day is the 9th, the debtor's name is T. Thomas, and he bought for 5,000 Rand from us, and our cost of sales figure amounts to 3,125. So, at the end of the month, when we've entered all of our debtors who have bought from us, we've got a total in our sales column and a total in our cost of sales column. We now need to post this to the general ledger. Now remember, sales is an income. So what do we do with sales? We credit sales, but we also need to debit debtors control. Why do we debit debtors control? The reason is debtors are assets, and assets increase on the debit side. Our cost of sales is an expense, so we debit cost of sales and we credit trading stock. Let's have a look at the actual example. Debtors control goes up, and we write the contra account called sales, right, 17,200. We got this from the Debtors Journal, so there's my debit entry. Now I need to put my credit entry in. May the 31st, and here I write the contra account, the other account involved, which is debtors control, DJ 17,200. Remember, sales is an income, so it goes up on the credit side. Debtors is an asset, and it goes up on the debit side. And now for the last two transactions, cost of sales is an expense, and I write the contra account, the other account involved, which is called trading stock. And then in my trading stock account, I write cost of sales. Simple, isn't it? So, let's just recap. When we post to the general ledger, the sales amount goes in my debtors control because they owe me more money. Sorry, let's go back. And then I enter it under sales, but this time the money hasn't gone into my bank. It's from my debtors control. My trading stock goes down because I sold it. It's gone out of my shop. And my cost of sales is an expense, so it increases on the debit side. So let's look at the accounting equation. For a normal cash sale, we would have debited bank and credited sales. We would credit trading stock and debit cost of sales. But now, for a credit transaction, we debit debtors control and we credit sales. So can you see this line is very similar to the cash sale transaction, except bank is now being replaced by debtors control. Remember, debtors control is an asset. So what happens at the end of the month? We surely want our debtors to pay us back. We don't want them to walk around with all our goods and we haven't got our money yet. So at the end of the month, they will start paying off their accounts. So now we will be receiving money from them. All this money goes into the bank, and we enter all money received into our cash receipts journal. When they start paying us back, the debtors account decreases. It goes down. Remember, debtors account is an asset. It goes up on the debit side and down on the credit side. The source document we use to indicate that they have paid us is a receipt. So here we go. When the debtor pays us, we give them a receipt and we subtract how much they now owe for us, and it goes into our cash receipts journal. So let's have a look here. On May the 25th, we received $6,000 from T. Thomas as payment towards his account, and we issued him receipt 112. Let's enter this transaction. Receipt 112 on the 25th. T. Thomas has paid us. It goes into our analysis of receipts, into the bank column, and have a look here. We now have a new column called Debtors Control. We know that T. Thomas is a debtor, so we enter it into Debtors Control. The next one, on the 28th, 113 is the document number. S. Smith has settled the amount owing. That means he's paid us in full. He's paid us 4,000 Rand, so it goes into analysis of receipts, bank, and Debtors Control. Have a look now. So now this 10,000 Rand from the debtors control needs to be subtracted from the debtors accounts. Therefore, we credit it. Remember the rule for cash receipts journal? We debit bank because money is coming in, and we credit the rest. So we're going to credit our debtors control with that amount. So let's have a look now. So we want to reduce how much our debtors owe us. There you go, bank CRJ 10,000 Rand. Okay, so posting to the debtors ledger. This is a very special ledger. Every single debtor in your business has their own ledger account, so that you can see at any stage how much they owe you. At the end of the month, each debtor will get a statement showing what their opening balance was, how many things they bought from us during the month, and how many payments we received. This is what a debtor's ledger looks like. It only has 3 columns: a debit, a credit, and a balance. I always like to write a plus under debit, a minus under credit, and an equal in the balance column. The reason is, remember, debtors are assets. Assets go up on the debit side and down on the credit side. So if we look at Crafty Curios, we can see that their balance on the 1st of March was 3,000 Rand. On the 4th, they came and bought on account, and we issued them invoice 002. We got this information from our debtors journal. They bought for 1,500 Rand. Now I want to know what their new balance is. So I go 3,000 Rand plus 1,500 equals 4,500. On the 6th, we issued them a receipt, and it was receipt number 25, which we had entered into our CRJ. So they are paying us back. So now we are reducing the amount, so it goes into the credit side. How do we work out our new balance? We say 4,500 minus 3,000 equals 1,500. So let's recap. To enter credit sales, we enter them in the debtors journal. We use a sales figure and a cost of sales figure. Look out for words like bought on account, bought on credit, or sold on credit. Once we've entered everything into the debtors journal, we post it to the general ledger. We debit our debtors control with the total sales column in the debtors journal. Debtors are then debited individually in the debtors ledger on a daily basis. We credit our sales in the general ledger. So this is what we call a triple entry principle.